it's very important to be patient about this because it takes a longer time to be able to create X number of trades also. But what's very important is to be patient until you develop something that you find practical, you find something that works for you, that coincides with your job or your business as well. Nice also to start writing down how your trades are. Either you put it in an Excel sheet or you put it in your phone. What you could put in is the price that you bought the stock, the price that you sold it, regardless if it was a gain or a loss, how long did you actually hold on to it, and then what were the parameters that caused you to actually buy it, and what were the parameters also that caused you also to sell it as well. Hey guys, so in the world of investing, what I've noticed is that majority of the people will decide based on emotions. And I highly suggest that as you evolve and as you become a better trader and investor, is to find ways on how you can get rid of emotion or try to find ways on how you limit it. Because the reality is, emotions will be there, especially when you see your positions go up or you see your positions go down. When you see it start to go up, it's so tempting to take profits and to sell. However, sometimes because the mentality of you wanting to cash in and make money already from your position and thinking about what if it will go down further, and that's fear tugging your heart. When that happens also, you may miss out on the possibility of your investment starting to continue to go up. And sometimes you selling quick, you miss out on larger strides, larger movements up. Uptrends are generally higher highs and higher lows. You have to realize when there are higher highs and higher lows, for it to have a higher low, there has to be a correction of sorts. That's why it's so important that you know and you learn how to identify trends also, so that should there be corrections from an uptrend, it doesn't face you, it doesn't cause you to be scared, it doesn't cause you to sell prematurely. That's why when you see a stock and a crypto in an uptrend, you can hold it, you can maximize it, and you can just wait up until it actually reverses. So why am I saying this? It also takes time to master your emotions. It's very, very helpful if you have a system that could help you, that will help you not decide on emotions. And when I'm in the trade as a position trader, my goal is just to maximize it up until the trend that's moving up is already finished. So when I see it that it's still in an uptrend, that actually means that, hey, I actually don't need to do anything yet. And to remove temptation, I just log off. Monitoring does not help you become a better investor. It does not help you become a better trader. The more you watch your positions, the more emotional also you will get. It's never about how much times you refresh your app or your portfolio. It's more about sticking to the discipline that if there's no signal yet to sell, then you're not supposed to do anything. And that's what you're supposed to do as a trader and as an investor. When the trade is telling you not to do anything yet, then just log out. Your earnings in the market is never about how active you are, but it's more about your analysis, and it's more about you executing based off on that analysis. I know it's hard, especially if you're starting out, to stick to your guns and not follow your emotions, because at the end of the day, what you're putting in also is your money. Create a lot of trades, but in smaller positions. Create smaller trades, do them over and over, because it develops the habit, the discipline, and it develops the skill. That's why I think about it in basketball. Some new players are brought into the G League so that they get in more experiences. That's how it is also for trading. The more you do smaller trades, it doesn't just allow you to get familiarized with trading and your system, it helps you become more immune, that you don't get too emotional. And it also takes an amount of familiarization for you to be able to get used to it. I think diversification helps a lot. When your trade is not just reliant on just one position or just one buying and you have it mixed up in different things, that will allow you to become more confident. If you look at it from that perspective, micro trades, diversified into different positions, I suggest also though that you don't trade in just one go. If you want to do micro trades, smaller positions, you do it one at a time. Don't leave a lot of positions open, especially if you're trying to practice and do leverage. As you're starting out, you actively know what's going on to the stocks or the cryptos that you're actually watching, so that you can be focused on what you're watching and what you're actually buying as well. It's hard to be knowledgeable and know everything if you have a lot of open positions and if you're watching different types of stocks as well. What I suggest though is you create a specific Why do you want? Ayaw mo ako pasalitain sa video. So when you're trading using technical analysis, you also try to find a routine and a strategy that works for you, because there's a different set of parameters if you're trading the range or you're buying at the support, selling at resistance, also versus if you're just following the trend as well. If you're trading the range, you could be using shorter time frames in terms of support and resistance, and also the moving averages that you might be using might be also shorter. But if you're trading via the trend, those are different types of opportunities and techniques as well if you want to maximize and earn and trade off of that. If you're using longer time frames, the moving average that you're using might be also longer. That also requires a specific set of patience, because longer moving averages take some time for you to be able to break it. Shorter moving averages though are easier to break, however they have more false signals attached to it. Longer moving averages are longer to break, but once it gets broken, it gives you a larger level of conviction that it's either turning bullish or bearish as well. So this is, by the way, what is this tour guide? It's called Hopare. It's a bronze sculpture. One thing you need to remember though also if in trading is that shorter time frames, the supports are weaker. However, you get to be more reactive because the breakouts also from short-term trading also will actually be faster, and then the take profit signals also for short-term trading are also faster. The range for short-term trading is shorter, meaning before it actually corrects, before there's a level of selling from a longer and larger perspective, you can already take profits. The difference though for longer time frames is the supports are stronger, the resistances are also stronger, and that gives you an ideology that when it hits the resistance, it's easier also for you to somehow put a take profit signal as well, because you know that the resistance is very strong, and because the range is longer, the margin from support and resistance is bigger, hence you have a larger trading range, hence you have a larger percentage also that you can maximize when you're making that trade as well. So there's nothing wrong with trading longer durations, there's nothing wrong with trading shorter durations, but what's important is you decide and you figure out what works for you. As you decide and figure out what works for you, you get to double down on that and get to put in more also. And in turn also, when you find already something that works, that's what will remove your emotions, that's what will cause you also not to be fearful or not to be too greedy also in certain movements of the market. It's very important to be patient about this because it takes a longer time to be able to create X number of trades also. But what's very important is to be patient until you develop something that you find practical, you find something that works for you, that coincides with your job or your business as well. Nice also to start writing down how your trades are. Either you put it in an Excel sheet or you put it in your phone. What you could put in is the price that you bought the stock, the price that you sold it, regardless if it was a gain or a loss, how long did you actually hold on to it, and then what were the parameters that caused you to actually buy it, and what were the parameters also that caused you also to sell it as well. So when you start trading and investing, you also create some sort of target price when you want to buy it, and then also where you want to actually sell it. Then you could also jot down there is if you actually followed your trading plan. You wanted to sell it at 10, did you actually sell it at 10, or did you sell it at 8, at 7, or 11, or 12, meaning did you actually follow the plan that you have? And what's nice about jotting everything down, you get to see over time if you're actually improving. You get to see your accuracy also. You have numerical data and information to see if you're actually doing well and if you're actually improving over a period of time. It takes repetition. It takes you doing a lot of trades, and for you to be able to do that and having a numerical data point will allow you to actually see if you're doing the right thing and if you're actually improving, and to actually also see what are the things that are working for you or not. How do you remove your emotions when you start trading and investing? You need to create a system. What that system will actually do is you have something that you could rely on. When there's a buy signal, you interact, you do something, you create a trade. When there's a sell signal also, that's the only time you would interact, execute, and make the trade as well. Everything else in between, you don't have to do anything. The making money part is not in how many times you refresh your browser or you actually monitor it. It's all about how you create a plan and you execute well based on it. Then all of that will be able to remove your emotions once you start doing it over and over, and there's repetition. If you can journal everything down, you can write everything down, it will help you realize what's a strategy that will work for you. It's not one size fits all. If it worked for other people, it doesn't mean that it will actually work for you as well. So links are down below if you guys have any questions. Could also send me your questions via the comment section, and I'll answer that by making a new video as well. If you stayed up until the end, and if this was something that was value adding for you, I appreciate it if you could like, share, subscribe. Little Satoshi would appreciate it too if you could smash the bell so you get updated every time I come up with new content about investing. I hope that this video helps you trade well, trade strong, trade smart, and remove your emotions so that you can become a better trader and investor, so that you can find something that will help you be profitable repeatedly over the long term. So that's it for now. Bye everyone.